Good afternoon, everyone. My name is Jeremy Morris, and I'm here today getting to join you, filling in for Paula. I am the Silk Director in Ohio, former SIL Director and former SIL staff that managed the financial operations of another SIL. So I'm excited to get to come here and talk today. And we're going to be talking a little bit about financial statements. So I am a mid-30s white male, he, him pronouns, green and white striped shirt. And you will have a PowerPoint up as soon as I click the buttons. So we will go through some quick information, and then afterwards we will open it up to discussions, questions, and get some conversation going. So today, some of the things we're going to be discussing, SIL boards and financial responsibility, and common financial statements and their purpose. So SIL boards, every nonprofit organization has a governing board of directors, and the job of these boards include protecting and guiding the public interest of a particular nonprofit, setting its own policies and assuring legal responsibility for the organization. The board is ultimately responsible for every major decision an organization makes. Full responsibility for the fiscal oversight, liability, and overall well-being of the organization. With SIL boards, the primary reason why Centers for Independent Living and other nonprofits fail is their inability to manage their finances. Remember, the board takes full responsibility for watching over the funds of the organization. They should be involved and they should involve themselves more in the area of financial oversight, not necessarily the day-to-day management and program operations. However, the board must maintain an active role in preserving not only the financial integrity, but also the mission, values, and beliefs of the organization. Board members should have working knowledge of their policies and be able to ask some basic questions. And some of the things that you want your board to be able to ask you, especially when they're looking at financial statements during board meetings, so does anything look unusual this month? They should hopefully be able to spot things that may seem off, maybe a little bit different than what it would normally be. Were there any significant adjustments to the books this month? Does anything look off budget? Are there any unusual expenses? How is our cash flow to date? Is there anything coming up that we need to prepare for? And where are we in terms of contract obligations? Now, the thing is, with a lot of these questions, you can help make sure that they're asking these types of questions and understanding this because of the statements that you prepare. And I accidentally have that slide twice. Board members need to review and understand the consolidated financial statements. Organizations typically review the financials monthly. One option is to present financials to the board, is to have it in the center's auditing firm present them. This might be a really good practice, especially if you've had a center that's experienced some financial difficulty, that could help ensure that things are moving forward, that any issues that had come up in the past are being resolved. These statements include an income and expense statement, which provide a comparison between budget projections and actual results, balance sheet, which summarizes assets, liabilities, and net assets of the organization, program reports. They should be reviewed at least on a quarterly basis. All financial reports should be given to the board in advance of the meeting so that members have ample time to review the information and formulate questions or concerns. So now I'm just going to go through a couple of the common financial statements that you'll see. Yes, the first one, statement of financial position, most commonly known as a balance sheet. This is a snapshot of what your organization owns and what it owes. So when we're looking at that, the things that you own, those are your assets. This is anything of value that your organization possesses or is entitled to, like cash, property, equipment, pledged donations, even if they're not received yet, accounts receivable, investments, and other things. Liabilities, this is anything your organization owes to anyone else. This could be vendors, creditors, or even employees if you have outstanding payroll or reimbursements. And your net assets. This is the difference between your assets and your liabilities. Essentially, net assets are what you'd have if you sold off all of your assets and paid off all of your liabilities. And instead of what you would see in a for-profit company being equity, that's what your net assets are. So in general, a healthy organization has more assets than liabilities. And it's one of the first things any CPA, bank, a large donor who's going to be looking at your financial statements, that's one thing they're going to look at very quickly. If you have a positive net assets, it shows stronger financial health, and especially in a bank who may be looking at giving you loans, donors that may be looking at giving you large sums of money. They want to know that your organization is in good financial health. Profit and loss statement, also known as an income statement. This summarizes the money that you've received, which are your revenues, and the money you've spent, which are your expenses during a given period. So I want to stop there for a second because that balance sheet, again, is a single point in time. So at one particular date, your profit and loss is over a period of time. It could be a month, could be a quarter, you could have one for the entire year, but it's summarizing from point A to point B, where a balance sheet is just one particular date. So this report essentially shows you how much money you've made or lost during that period of time, which is why it's called a profit and loss or income statement for the company. That is probably the statement that most people are more familiar with. This third statement is probably the one that people are less familiar with or understand the least. A statement of cash flows. And a lot of times, board members may want to have this information. They may think this is going to tell them what they're trying to figure out, but what they want is probably a combination of information from multiple places. The statement of cash flows, it's a simple report, and it shows how your cash has increased or decreased based on 3 categories. So the first category is your cash from operations. So this is the cash that is generated and spent from normal business activities. So it could be your fundraising and your earned revenue minus expenses and collection of receivables, payments, and liabilities. So your normal course of operating business. The second category is cash from financing. So the difference between cash received and borrowed from creditors versus cash that you've paid back against outstanding debts. So the examples, a line of credit, a mortgage, a loan. If you took out a new loan, that would be a positive increase to your cash from financing. If you paid off that loan, that would be subtracting from that cash from financing. And the third category is your cash from investing. So this is the difference between the cash received from investments or sales of assets versus cash spent on the purchase of capital, equipment, or other investments. This report can help you explain to your board why you have less cash, even after you've had a successful quarter or period of time or a month. And maybe you invested some of that, so if the board sees that, or they know that we've had a really great quarter, we had a huge fundraiser, but the cash balance on that balance sheet is lower than what everyone was expecting, this is the statement that shows where was that cash used or earned. So the example here is maybe you invested some of that cash and purchased equipment. It can also help understand why your cash has increased, even if you've lost money that quarter. So say it's the beginning of the year and you have grants that are just starting and you have to be reimbursed for them. So on October 1st, the beginning of the federal fiscal year, you take money out of a line of credit. So that cash from your line of credit has come to you. So your cash is increased, but you may have technically lost money for that period of time, or you may be at a negative on your income statement because of you haven't received the cash from your grants yet, but you got the cash from the loan that you took. The budget versus actual report. This is probably the one that I think every board probably has some of the most familiarity with. The budget versus actual helps you easily compare what has happened in your business to what you expected to happen. Budget versus actual, it's an internal report and it's not part of your audited financial statements, but because the board and leadership are involved in creating that budget, they often see this used more often. As the name implies, you are going to show your budgeted revenues versus your actual revenues and your budgeted expenses versus your actual expenses. This is a great place that you can have additional information, notes, even include the percentages of how far along you are in your budget. And it helps the board understand a little bit more of where things are at, and it can help them understand where to start asking questions. If you have major expenses that happen at the beginning of the year and a particular line item is at 50% when you've already gone through 2 months, that's something you want your board to be asking questions about. You want them to say, hey, we're only 2 months into the year and we've already spent 50% of this particular line item in the budget. Those are the things that we want boards to be noticing and asking questions, because that makes sure that they are providing that oversight and they're well informed about the organization's financials. Your IRS Form 990. I did add this one in here because it is important, even though it's not your typical financial statement. It is that tax return that you're sending in to the IRS. It's a publicly available financial document as well. So again, your outside funders, your donors, other people can obtain this report. And importantly, if you do fail to file your 990 as a nonprofit for 3 consecutive years, you'll lose your tax exempt status. So it's one of those things that you really want your board to understand and be aware of. And if you have an auditing firm or some other firm that is preparing this, have them present the 990 to your board, because it can be a really important thing. And for those who, are not as familiar with it, there are a couple questions on there that asks about, the board oversight of things. It asks about conflict of interests and whether or not there's policies. So make sure that, your board is aware of everything that is part of that Form 990. And of course, dashboards. This is something that I really like because it's something that you can use to supplement any of those previous reports to explain the financial information, especially to board members who they may not understand the financials well. It's very common for people to get on boards because they are passionate about the work and they care about the mission and they don't really know the financial aspects of organizations. So this can help them to understand some of it a little bit better than just looking at a spreadsheet full of numbers. You might be able to have some charts or other visuals. You could have, like I said, the percentages that are in there. You can create really great dashboards around program funding and how much funding has come in versus how much funding has gone out. This can be a really good way to help give the board additional information so that they can understand what the center is doing. And importantly, all financial reports should be given to the board in advance of the meeting. I know I said this before, but you should have that information out so that they have time to review it. They have time to come up and look at it, find questions, so that they can understand it and that they can fulfill their role of providing the oversight and guidance to the organization. As always, you have Paula McAwee's information. I believe next month she'll be returning back. She'll be returning back to be your host of this call. So the slide has her contact information. You can also contact your program officer. We do have an evaluation, and that will be in the chat as well. So with that, I'm going to stop sharing, and we will open it up and